Hey, good morning. So let's get started. We'll talk a little bit more about the markets later. But for now, let's invite our first corporate of the day. Shriram Properties is in focus. They've given out their Q3 updates. They've seen nearly 30% growth in collections on a year-on-year basis, even as the sales value is flat at about 416 crores. So to understand the quarter and also to get in some more details, which we'd like, let me invite the company's chairman and MD, Murali. Mr. Malyapan, morning. Thanks very much for joining in. First up,
Good morning.
I wanted to understand the sales volume which you have given at 1.03 MSF. What is the year-on-year figure for us to compare with? And secondly, your sales value is flat in a quarter where, peers have seen growth. So can you tell us why?
If you look at the growth on the sales in terms of square feet, for the 9 months time, we have got about 56% growth. On Q on Q is about 3% growth. Sales value has been little flat because we have introduced quite a lot of plotted development. So that is about 30% in the last 9 months time. But as we move on, lots of apartments are getting launched. As you see, last 3 years time, we have done about 3.5 million square feet average sale. This year, we are looking at close to about 4 million square feet. As you know, plots have got a lower value compared to the apartments. But when we do this year, close to about 4 million square feet, you will see a good rise in the overall value, sales value.
You're saying for the year, you will do 4 million square feet by way of volume. So for the first 9 months, you've done about 2.6, which means Q4 will see a big improvement to about 1.4 million square feet?
Yeah. Absolutely. If you look at, real estate historically, Q3, Q4 have been a bumpy, period all the time for the real estate industry. So Q4, good projects have been lined up. In the first 9 months, we launched about 5 projects, which has got about 2 million square feet. Again, we sold about 45% on sales. That's another good benchmark. Now we have in Q4. Last year, we did about 1.3 million square foot on Q4. This year, we should beat that to reach our overall number of 4 million square feet. It's just not Q4 alone. Our performance will be very good, expected to be good in the next 8 quarters. They've got a very strong pipeline of projects lined up. As we speak, Q4, we are planning another 3 launches now, close to about 1 million square feet. And FY23 and 24, again, we've got a good project pipeline. We should be able to achieve 25% CAGR growth for the next 2 to 3 years' time.
Mr. Malyapan, good morning and thanks a lot for joining us. This is Pavitra. You had around 700 crores of debt pre-issue, and I think you used around 400 crores of that from the IPO proceeds to pay up your debt. You still have around 300 crores as of December. Can you take us through what the stand is on that? How much is your current debt at right now, and when do you think you can be debt-free?
23-24, we expect to become debt-free from the project cash flows. We are seeing Q3 has turned out to be very, very profitable. And Q4, again, we expect for the year, we expect to end the year with good positive net cash flows and PAT. Cash flows are looking very, very positive because as you see the projects which have been sold in the last 2 years' time, completed now, which is creating a good positive momentum and positive cash flows. So FY23-24, we expect to become debt-free. From the IPO proceeds, we use about 200 crores to reduce the debt. And Q4, again, we expect some good cash flows to come in. Maybe by end of the year, we will reduce some more debt from the project cash flows. So FY23 will be an eventful year for us. A lot of new cash flows which are coming in, which will not only help reducing debt, which will also help pushing the new projects up in the market.
Okay. What is the trend you expect in terms of pricing? You think you'll be able to nudge it a bit higher?
Yes, prices are likely to go up. We expect at least 5 to 8% price increase in the next 3 quarters. So next year, like Diwali festival period, we expect the prices to touch at least 10% increase in the product because of the consolidation. Today, if you look at every micro market, not even 10 players catering to about 90% of the demand today. Hence, we expect the prices to go up because of the consolidation. And we are all well set to take the prices up further in all our product range. That will also add to some more margins for all the branded large real estate developers.
Okay, one final question, and very quickly, sir, if you could tell us, based on the launch pipeline, what are the sales volumes you can do in FY23 from 4 million square feet this year, and what will be the breakup between affordable, mid-segment as well as luxury?
We don't have too much of luxury. We believe our country needs a lot of housing on affordable housing and mid-market segment, and we also believe that there is a sustained momentum and sustained demand for a longer period of time. Even if there is a war between Russia and Ukraine or global war, but still there will be a need for affordable housing and mid-market housing. Keeping this in mind, we decided to stay focused on this affordable and mid-market segment. We expect the growth to continue in this space. We decided not to have too much of luxury, very small component in luxury, but mainly on mid-market and affordable segment. So we expect FY23 to have 25% growth from FY22, and projects are all fully lined up in known markets. Hence, we expect a good demand, not only price increase, also volume increase for us for FY23.
All right, sir, we will leave it at that today. Thank you very much for joining us and taking us through the Q3 update as well as what the outlook is looking like going forward. Remember, this is a company which listed in December. So, and ever since listing, it is down around 10%, the stock. So moving on now, and this is some important news coming in on the future versus